Vijay, I'm going to pick up on something we were talking about last hour with Christina, which is take NXP, for instance, with all of this autos exposure. Do you want exposure to that segment of the market? If Texas Instruments insists it's doing fine, but it feels like there's signs we're turning from shortages to gluts.
Yeah, thanks, Kelly. I think specifically to NXP, I think they have executed very well. But that said, what we're seeing is a little bit of a slowdown. I think China was kind of soft in the December quarter. And going into 2023 as well, in the first half, what you're seeing is autos are slowing down. I think sales are slowing down. Auto financing is at pretty high levels. Affordability is very tough. And so we think you're starting to see the auto side start to slow down. So we'll be more cautious. You're seeing big OEMs like Ford, GM all start to cut pricing, right? So where we had a supply shortage last year, now we are going to a demand slowdown on the auto side. So we'll be more cautious. The analog supply chain is starting to recover as well. So you're starting to see some things go the wrong way. So we'll be a little bit more cautious. The industrial side, by the way, is also a little bit softer. I think you saw some industrial PMI numbers come in softer. I think Texas Instruments, as you noted, had soft guide as well. So, yeah.
Yeah.
So I know you say, I mean, you point out several things about how semiconductors tend to outperform most years, the S&P 500 and the NASDAQ and so on and so forth. But this year you say you see a more favorable investment entry point likely in the second half of the year. Explain a little bit your reasoning there and how does that translate? In other words, do you expect that these names will decline a little bit more during the first half of the year and then hit a bottom and then that's your moment?
Yeah, I think what you see in the first half is basically a situation where things are softening. Revenues, the top line is coming down, but inventories are going up. So we'll probably hit that peak somewhere in the second quarter in terms of inventory peaking and revenues declining. And by the second half, we start to see a recovery. So that's how we look at see the semis broadly. But key names we like here on the long side would be NVIDIA, names like AMD on the data center side, Broadcom, Credo, even the silicon carbide names like ON Semiconductor, Allegro, etc. On the long side. But yes, definitely going to the back half, what we see is some of the data center names, some of the gaming names start to work better, whereas the auto side, I think you still see the consumer in a pretty weak spot, pretty stretched, because if we have these high rates continue through the end of the year, which it probably will, it's going to be a little bit of a headache for the auto supply chain.
But I might worry, mightn't I, Vijay, that the Van Eck, the SMH is up 17%. I may, if I follow your advice and I think, well, the second half's going to be better, I might think that the train is going to leave without me here.
Well, I think near term, you definitely have had a pretty significant run in the SOX. So right. I think here you probably have, it's kind of run a little bit too far, too fast is what we would say. So we'll be a little bit more cautious stepping into the name. So.
All right. Finally, Vijay, as we kind of discern what's happening with the cycle more broadly, you said when your topics NVIDIA, AMAT, Broadcom, AMD, I mean, all of these are cyclical, right? Is there any way, if you wanted to kind of sidestep things, can you do that in the world of semis?
Well, I think the reason we highlighted those names is they have gone through an inventory correction much faster. So somebody like NVIDIA has cut supply into the gaming channel almost 50% below what native demand looks like the last 2 quarters. So you have a little bit of a bottoming of inventory in some of those markets, especially when you look at NVIDIA and some of the data center guys also, they've been cutting. AMD cut PC like 50% in the September quarter. So you're seeing some accelerated inventory cuts in those markets. So we should see those segments stabilize faster. Whereas what you're seeing on the auto side is really inventories are actually starting to pick up more,
right.
And demand is starting to slow down. So they are a little bit have lagged some of those inventory cuts that we saw in some of the other markets.
No, but it's a good point that, if we hear, for example, something worrying from NXP, you can say, well, some of these names have already moved through this more quickly and tried to get ahead of that cycle. We appreciate it.
All right.
Vijay, thanks so much.
Thank you, Vijay. Appreciate it.